Drill on earnings, we've got Google earnings. We don't call it Google earnings, we call it Alphabet earnings, because that's the name of the company. Here's the business story behind that stock, which is on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Alphabet earnings, Q4 earnings, pretty good, right in line with estimates, both in terms of the $96.45 billion in the quarter in revenues and $2.15 in earnings per share. If you read into the press coverage, they're going to say they missed on revenues. Yeah, by 0.1%. Who cares? What's going on with this business is interesting, though. 12% top line growth is good for a ginormous business like that, but it's the slowest growth they've seen in, I don't know, what a year and a half or so. So 12% growth, good, but not great. And it looks like the revenue growth is cooling for this company. Nonetheless, double-digit growth across all of their businesses. Google Search growing quite well, Google Cloud growing at 30%, operating income at 30% increase, and operating margins at 32%. That's 5% better than last year, but it's kind of constant where they've been all year long, really. I mean, my goodness, 32% operating margins on $96 billion in quarterly revenue, 97 if we round correctly, which we can do, because we can do math. Let's look at what the business is. The business is search. There's a lot of talk about a lot of things, but Google Search, 57% of revenues. So yeah, YouTube matters. Google's network matters. Their subs business doing well. Google Cloud, although it's just 13% of revenues compared to the 0% of revenues their other bets are, 13% of revenues, but it's growing so fast and it's so much the future of the business. There's a lot of concern about Google Cloud. So 30% growth in Google Cloud you would think is great. 12 billion in revenues quarterly, you'd think that's great, but that's slower than it was last quarter, a disappointment as we enter this age of AI. You'd think you'd see fabulous growth there, and it wasn't there, and that's the real concern of the market. I also want to mention YouTube, because we love YouTube, because you're watching us on YouTube right now. 14% revenue growth in YouTube, better than it had been. Remember, this business was shrinking 2 years ago. Now it's growing at double digits at massive scale, over $10 billion in revenues. The company cited podcasts, stuff like this, like what we're doing right here. Their podcast business driving growth in advertising revenue for YouTube, really strong. Also on the conference call, we learned, I said in English, that they're going to take their capital expenditures from the ginormous number of $58 billion a year to $75 billion in the year of 2025. So spending a lot of money. Maybe the street didn't like that. The stock was off 7% on after hours trading, but that's after being up 45% in the year, vastly outperforming the S&P 500 index. In the conference call, the CEO was asked, Sundar Pichai was asked in many ways, what do you think of, why AI? Why $75 billion? Is it really worth all of this? Does DeepSeek make you think about sinking all this money into capital expenditures differently? Absolutely not. Defending those CapEx numbers, here's the CEO of Alphabet.
Part of the reason we are so excited about the AI opportunity is we know we can drive extraordinary use cases because the cost of actually using it is going to keep coming down, which will make more use cases feasible. And that's the opportunity space. It's as big as it comes. And that's why you're seeing us invest to meet that moment.
So what does it all mean? And what's your big drill down earnings takeaway? Well, Alphabet Q4 earnings out, really strong numbers, nearly $100 billion in revenues in the quarter, jaw-dropping numbers, but 12% growth was slower than it had been in the previous few quarters. And that's a little bit disconcerting because of all the money they're pouring into the Google Cloud and into AI development and data centers. That's going to get as high as $75 billion in this calendar year, but that's not the bite. That's not the one number that tells us a whole lot. The number that tells a whole lot is 30% growth in the cloud business for Google Cloud. Is that enough? Maybe some people on Wall Street say not. I say when you compare it to YouTube, when you compare it to their giant search business, 30%'s pretty good, Google, Alphabet, whatever you call yourself. That's Drill Down Earnings. Thanks for checking us out. Check me out on X at Cory TV. Subscribe to us on TikTok, Instagram, and definitely on YouTube, because it's Alphabet, YouTube. Why not? We're all one big happy family. But subscribe, we would appreciate it.